Today we'll explore one of the most basic yet effective tools in trading: support and resistance levels. In simple terms, these are boundaries on a chart. You can draw them yourself, and they show where the price most often stops and where it finds difficult to move. Imagine there is a floor and a ceiling. The floor prevents the price from falling below, and the ceiling prevents the price from rising above. These levels help us understand where to open trades. Okay, let's start with the support level. Support is that floor where the price constantly bounces upward. I marked this line on the chart. Look, the price came here once, then a second time, and then reversed again. This means the market seems to be finding support at this point. I see that the price has also touched this level now, and I fully expect growth from here. This is what a support level does. It holds the price down. Now let's look at the resistance level. It's the opposite story. The resistance level is a ceiling, above which the price can't rise yet. It hits the ceiling and goes into a correction. The chart shows that the price approached this level once, and then went down again. It turns out we are in a sort of corridor. Support below, resistance above. The price moves back and forth, and this fluctuation can be traded. Look at the price movement. First, it approaches support, then bounces back up to resistance. There, it hits the ceiling, then falls back down to support. Then it rises again. This cycle can repeat itself many times. And if you learn to spot these levels, you can spot good entry points. And now, for example, the price is moving from support to resistance again. This is a great time to understand what's going on. If the price approaches resistance, you can look for a bearish trade there. Why? Because there is a high probability that the market will fail to break through the level again and will correct downwards. This is a simple and effective strategy. It becomes even stronger when used in conjunction with indicators. But even without them, the levels already give us a clear picture. To make things even clearer, let's move from theory to practice. I'll open a few trades and show you how resistance and support levels work right on the chart. This way you'll see that this isn't some abstraction, but a real working tool. Look, I'm opening a long trade. Why? Because the price has just reached the support level we identified. There was a rebound here before, and now the situation is repeating itself. This suggests that buyers are defending this level and are ready to push the price higher. I'm waiting for a rise and closing the long trade. Of course, there wasn't a strong surge at the moment. The trade closed near zero. The price dipped slightly lower, but still reacted and moved higher. So the idea worked. There was a rebound. But the trade simply didn't have enough time. That happens. The main thing is that the level confirmed itself. That's already a plus. Let's look for the next opportunity. I'm opening another buy trade. There's an important point here. When the price repeatedly approaches resistance and the pullbacks become increasingly weaker, it's a signal that the level is ready to be broken. The first time, the price dropped sharply. The second time, the pullback was smaller. This means buyers are gaining strength, and sooner or later, the ceiling will break. I see this picture, and so I enter a breakout trade. And yes, it all worked out. The price broke through the resistance level and I took my profit. This is an example of how you shouldn't just draw levels, but rather monitor the dynamics, how the price reacts. Sometimes it's better to trade not from the level, but specifically for a breakout. Let's look at another example. I open a long trade. Here we again see resistance, which has twice held the price back. But the third time, the situation changed. First a false breakout, then a real one, and the price shot up sharply. I place a long trade. And again, I made a profit. The level is broken and the price moves higher. So we've got three trades. The first closed almost at break-even. The second and the third with a solid profit. The support and resistance levels worked perfectly. I recommend you practice. Open a clean chart and mark these zones. Watch how the price behaves near them. In the next lesson, I'll show you how to add indicators to make even more precise trades.